Thank you, Kamasi. Joining us now to offer some analysis of the market's turmoil is Joe Krier, financial planner with Krier Wealth Management.
Joe, you heard what Titus Pittman just said about oil prices, which are thrilling drivers, of course. What is it, though, about falling oil prices that prompts an investor to dump their Apple or Netflix stock?
Yeah, good question, Mary. I mean, there's a mixture of things here. One of the main things is when oil drops as far as it has from the highs, that people are worried it's predicting a global slowdown. And if the global economy slows down, there's less revenue for corporate America, and therefore less iPhones being sold or less movies being rented, and it kind of spreads across the spectrum. So for now, it's just the good news that you had reported on a minute ago, but the bad news hasn't really found its way through yet.
Okay. Joe, at one point today, one index, the S&P, had fallen to its lowest point in 2 years. Should the average investor have sold their stock before all this began, and is it too late to sell?
Another good question, Tom, and it's very hard to pick market tops here as we go along, and panicking in the middle of something like this is another big mistake that gets made. You know, we see days like today, which we refer to as capitulation, where large institutions are dumping anything they can sell. They think they can get a half-decent price, and that's the time for the retail investor to step out of the way, let cooler heads prevail, and then make a decision.
Joe, there are predictions out there that this, what would you call it, collapse of stock prices will continue all year. Is that extreme in your opinion?
I think it is. You know, what we've seen over the last 10 or 15 years is that when markets correct, they do so rapidly. They get all the bad news out of the way, and the best cure for low prices is, in fact, low prices. There's a point where institutions start looking at stock prices and they can't help themselves but to start and nibble. And, you know, things like healthcare, grocery stores, necessity type items, they're always going to be there. We're always going to turn the lights on. So there's always going to be buyers for those type of investments.
Joe Krier, thank you very much for your analysis. Appreciate you coming into our newsroom.
Falling gas prices are one of the major factors in play, according to Joe Krier, who specializes in wealth management.
The market is worried that the drop in oil prices is projecting something bigger, or that there's problems lurking out there that maybe we're not aware of, because the market does have a tendency to forecast what's coming in the economy.
Krier says the Chinese market has been extremely volatile, which is also spooking investors around the world.
With low oil, energy companies are struggling, and some of them might fail, which could lead to banks taking losses, and then you sort of have a domino effect that really affects the market.
January is usually known as one of the best months of the year for the market, but Krier says people should expect a drop in their first quarter statements because there really hasn't been a safe place to hide.
Buy and hold has worked through the years with diversified portfolios. Chances are it will work again now. A lot of people are drawing analogies between what's happening right now and 2008.
And Krier says 2016 isn't anything really like 2008, and that the market will recover, but that these gas prices will be low for quite a while. And I did just check at Let's Check, the stock future for the Dow is up 88. I'm live, Nicole Snyder, Channel 4, the local station.